Welcome everyone to Best in Interest. This is Shane back again for another Stock Pick of the Day video. It is Tuesday, November 19th. We're going to take a look at H&R Block today. This is out of the consumer discretionary sector. Now, before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the Best in Interest community. Click the notification bell so you're notified whenever we put out any new content. I do these Stock Pick of the Day videos Monday through Thursday whenever the market's open. And if you'd like to buy me a cup of coffee, there's the thanks button down below. You can hit that. There's several tiers in there that you can donate to the channel as well. And I really appreciate everyone who does that. And understand those of you who can't. I know finances are tight for everybody. And a special thank you to all the subscribers out there. You guys are awesome. The channel continues to grow because of people like you. Now, this is the vested interest stock screener. This is how we're going to go through the video. We'll look at this criteria. At the end, we will see if it meets 5 of 8. If it was a financial company, it would have to meet 6 of 9 to make it onto my watch list. Just because it makes it onto my watch list does not mean I'm buying. It just means that I do more of a deep dive into the financials of the company, taking a look at stuff like their balance sheet, their income statement, debt to equity ratios. I want to see revenue growing over time. I want to see margins expanding over time, them paying down their debt. Several factors in there that I look at, but this is an initial screener that we'll go through in this video, and we'll see how it stacks up at the end. And now, if you want to know more about this company, check them out at their homepage, www.hrblock.com. That's www.hrblock.com. That is their homepage where I pulled this information from. And they are a tax provider. They do your taxes, whether that's online or in person. They have 950 million plus tax returns worldwide, 20 million plus filed with us in 2024, 5 million plus switched to Block in 2024. So again, if you want to use them to get your refund on your taxes, or if you're like me, have to pay in at the end of the year, they will do your taxes for, and they are a tax provider. That's what they do. Now, the reason we're taking a look at them, down 8.12% on the day, huge drop on the day. We're talking about H&R Block, ticker HRB, again, out of the consumer discretionary sector, closed out the day at $55.45. 52-week range as low as $42.28, as high as $68.45. Not quite within their 52-week low, but getting pretty close. I think it was under $48 they need to be. Market cap of $7.599 billion, a beta of 0.68. Price to earnings ratio, PE ratio at $13.79 per share, pretty low. EPS, earnings per share, at $4.02 per share. They're February 4th through February 10th, whenever they're going to put out their next earnings report there, so tune back in for that if you're interested. Forward dividend is $1.50 paid out in the year. They are quarterly payers, so divide by 4, though we will see that here in a little bit. Nice starting dividend yield of 2.49%. Ex-dividend date is going to be on December 15th. They're going to pay out January 6th. One-year target estimate, at least according to Yahoo Finance, where I pulled this information from, $62.67. So they do see some upside from where it currently sits as far as price appreciation over the next calendar year. Jumping over here to the right, I'd like to look at dividend yield theory to see if this one is presenting any undervaluation. To do that, we take their 5-year dividend yield average, 4.0%. We compare it to the current 2.49%, or over here where it says forward, 2.49%, same number. Since it is lower, that actually speaks to overvaluation on this one. So according to dividend yield theory, this one is potentially overvalued right now. Now, the payout ratio is very low at 33.21%. We went over their ex-dividend date. I like under 75% there. Now, jumping down to their free cash flow, I like growing free cash flow over time, because typically if a company has growing free cash flow, they have growing dividends to match. That also means they can continue to pay down debt, make acquisitions, reinvest back into the company, buy back shares, all the things companies do with free cash flow. Going back to June of 2022 here, $746 million in free cash flow. 2023 was $752 million, so a jump up there in 2023. 2024, another down $657 million, and it looks like so far in the trailing 12 months, pretty close to what we reported back in June here, $657,771 compared to $657,182. And just keep in mind that part of this TTM, trailing 12 months, includes the numbers that were reported here. They are repurchasing shares. $563 million in 2022, slightly up in 2023 to $568 million. 2024 was down, so not only did their free cash flow drop here, but also the repurchase of shares down to $379. Now, it does look like they've increased that repurchase of shares in 2024 here, but we'll have to wait to see how the rest of the year shakes out for them and what their final numbers look like. But no growing free cash flow here. Definitely looks like from 2023 forward, they've definitely dropped. Not only free cash flow, but repurchase of shares as well. Now, jumping over to stockanalysis.com, they do have two analysts that have taken a look at this. They call it a consensus sell, and I do recommend more than one source to look at for information, stockanalysis.com being one, Yahoo Finance on the previous page being another one. And the reason I recommend two, if not three or more, is so you can make sure the information you are getting is accurate and up to date. Sometimes these sites take a little while to update. Sometimes they're just wrong. It happens. So don't blindly just be looking at one source for your information on these companies. At least that's my recommendation. They do have a low estimate of $44. That would represent a 20.59% decrease from where they currently sit. Average estimate of $57 would represent a 2.87% increase. And if it happened to hit their high of $70, pretty close to what we saw with Yahoo Finance on the previous page, that would represent a 26.33% increase, and you could collect that 2+% dividend yield that they currently are paying out. Now, jumping into statistics, I like to look at return on invested capital and return on equity and see how well the company is reinvesting its capital back into itself. They did not have return on equity listed. I like 10% or better for these numbers. Some NA is not good. Don't like that. Return on invested capital is good at 31.33%. Very, very high. A nice number there. They also did not have EPS listed or EPS growth forecast listed. I like 5% or better there, and I usually throw in revenue forecast, but they didn't have that either, so can't look at that. Don't like whenever they don't have the numbers. I have to do a little bit more of a deep dive to see if I can find it somewhere else. Now, looking at their dividend history, quarterly payout ratio is low, again, under the 75% that I look for at 36.52. Dividend growth, double-digit dividend growth here, 12.18%. Very high dividend growth with a low payout ratio. I like that pairing right there. Growth of 8 years. Buyback yield is positive at 7.72%. That's very high buyback yield. Shareholder yield positive at 10.43%. Very high as well. They do pay out on an off-month schedule, January, April, July, October. I do like that. They, back in March 2022, were paying 27 cents per share, raised it up September 2022 to 29 cents. Was that the most recent? Nope. September 2023 up to 32 cents. And the most recent, this one here that paid out in October, they raised up to 37 cents and some fractions of a penny there. So they are growing the dividend, double digits, very nice dividend growth, and I like it paired with the low payout ratio. I also like that they pay out on an off month. Let's take a look at the screener and see how well this one stacks up. Understand the business. Again, they prepare taxes. That's what they do. Anyone who's done taxes understands what that means. Growing free cash flow over the last 4 years. No check there. Growing dividend. Yes, double-digit growth. Dividend payout ratio is under 75%, so check there. Dividend yield theory says it's potentially overvalued. No check. It is not within 15% of a 52-week low, so no check. Return on invested capital and return on equity. Only return on invested capital was over 10%. Return on equity was not listed, so no check. Earnings per share growth was not listed over 5%. It wasn't listed at all, so no check. So it only gets 3 of 5. It does not make it onto my watch list. That is H&R Block. Let me know what you think of this one in the comment section down below. And that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it in the comment section down below. I'll work into the rotation. Don't forget to hit that notification bell and hit that hit the notification bell and hit the subscribe button as well. Again, join us on this journey to financial freedom. Join the vested interest community. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation and circumstances and select criteria, or seek the advice and counsel of a certified financial advisor.